going on, people? Luke here from LAGFX. We're back today with a new Sunday Sessions video. If you're new to this series, it's where we choose a few pairs and a few markets that we feel hold good potential for the coming week, and we give you a good rundown and breakdown on the analysis we have performed prior to recording this video. This obviously allows you guys to go and apply these zones and areas to your own charts, and then throughout the days and weeks, you'll be able to then apply the necessary strategies and the necessary risk management and profit with the LAGFX team. This is obviously assuming that our analysis plays out. If you do go on to enjoy this video, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated. And if you have any questions or any queries regarding the analysis we go through today, then please leave them in the comments below. Now, this Sunday Sessions will be a little bit longer than the usual ones, and this is just because we have James with us today, who is going to be providing some analysis for us after my segment. So I hope you guys enjoy that. It's always nice to see James on the YouTube channel. And if you guys aren't involved in the Learning Lounge group chats, or the chats that we have over on Telegram, head down to the link in the description and get yourself involved on there. Now, with all that being said, let's jump straight into today's Sunday Sessions video. So the first pair we're going to be going over today is the Great British Pound to the US dollar. We can see here how this pair has been trading us in a bearish way for some time now. We've had a higher time frame break of structure to the downside after a penetration of a higher time frame supply zone. So this suggests that enough supply has been introduced to give us that S&D flip, that balance to the downside, suggesting further bearishness. We've obviously been delivered with that. Now, as we know, with every bearish impulsive wave, or with any impulsive wave, a correction is always to follow. So with this impulsive wave trading us lower, we can expect a higher time frame correction to be integrated and implemented into this market. So what we are seeing at the moment, if we just focus now on current data, we can see here how price is actually accumulating. So price is actually building demand in order to push price higher before trading us into a higher time frame supply zone, before then trading us lower. Now, as I say, the reason why we want to see price trade up and into a higher time frame supply zone is to obviously set that first higher time frame lower high. Then what will follow is an impulsive wave that then trades us lower, creating new lower lows in this market. That obviously generates us with clear bearishness. Lower highs followed by lower lows. So you'll see here that I have marked out a few areas of interest. There are actually quite a few unmitigated areas or order blocks that have been left over for price to come in clear. I would like to see price trade up and into an order block all the way up here, as this would follow the higher time frame structure and would actually create a head and shoulders pattern for us. You can see here how we have the first shoulder followed by the head, and then the second shoulder would follow once it trades into one of the supply zones that we've got marked out above. Now, if we were to get involved in this market in the coming week, what could we do? Well, we could definitely look to get involved in long positions, taking advantage of the current structure of this market. I feel like bullishness is here to stay for some time, or at least until it trades into a supply zone that gives us that S&D flip. So, in terms of getting involved in buy positions, we obviously want to see price come back down to correct itself. There is an order block that's been left here, which I would suggest price could come down to trade and clear. We can see here that there's inefficient structure as well above. So price could trade down to clear this inefficient structure, trade into the order block before trading higher. That would be setting a higher low within this new bullish structure that we should be seeing in the coming week. And I've also got this one marked out here. So what I'm going to do is I'm going to add the value of this order block, so you guys can go ahead and apply this to your own charts on the 4-hour timeframes. Perfect. So as you can see, I've marked out these two areas in price. This is on the 4-hour time frame, so if you want to go ahead and mark out these for yourself, as I say, these can be brilliant areas to get involved in those buy positions. We can see here how we've now had a break of structure to the upside. This was the break of structure initially. This here would be a high time frame break of structure, but we have been delivered with the suggestion that price is ready to trade higher. So now we just want to see price pull back, trade into a into a demand zone to set that higher low, and then we can obviously get involved in those buy positions to trade price up and into an order block that's set up here. So what I'll do is I'll leave the screen like this, pause the video now, mark these out for yourself. Again, these are on the 4-hour time frames, so get these applied to your charts, as these are going to be areas we can look to close any buy positions we've placed and prepare to go short from. But that is my analysis for the Great British Pound to the US dollar market. Definitely looking for buy opportunities. We just need to wait for the right opportunities to get involved. Okay, now heading over to the NAS100. We just go to the higher time frames. Just want to show you my analysis and how I feel price could play out. So we weren't delivered with a break of structure after the penetration of this supply zone here, which is absolutely fine. What we are seeing is price actually slow after trading into this supply zone, so this is good news. We also have this one as well up here. So you haven't marked this out, mark this out, because this could be an area to potentially go short from. However, price is actually trading into this one, and we are seeing some signs of rejection to the downside, which is very good news for us, as it means we could potentially look to go short in this market this coming week. So definitely mark this out as well. This is on the 1 hours, and then we also have this one here. That's on the 1 hour time frames as well. If you aren't familiar with my analysis on the NASDAQ, if you've not watched previous Sunday sessions videos, I am definitely looking to see this market go bearish longer term. After price traded into this higher time frame supply zone, we've been delivered with a break of structure on the higher time frames to the downside, followed by multiple lower highs and lower lows. You can see here how we have clear bearish structure, and wanting to see this continue, trading us all the way down to the 8,000 mark, where then we will expect the S&D flip to the upside, and we can obviously look to take this market longer term. As we know, this is a bullish market on the extreme higher time frames. However, we can expect price to put in a higher time frame correction, which is what we are seeing now, trading us all the way down to the 8,000 mark before we look to go bullish once again longer term. But as I said, if we go back to the 15 minutes, you can see here how this would be considered the last protected low within this bullishness that's traded us up and into this supply zone. We want to see this protected low break, as that would confirm that enough supply has been introduced here to continue trading price lower, or to set that new impulsive wave to trade price lower. And then from there, we can expect price to pull back to set its first lower high, and then that's when we would look to get introduced. We would definitely be wanting to get involved in this market with a refined entry. So it's important that when price does break structure to the downside, we are looking at the impulsive wave that broke the structure for any areas that have been left unmitigated. There is an area here that I can see straight away. So if we go from this to this, I would say that has been left unmitigated. Other than that, there isn't anything else. So this would be, oh, in fact, there is this up here as well. I don't want to miss that. So we've got two areas here that price could trade up and into to create that lower high, and then we could go short in this market, giving us the ability to get involved in this market with a very, very refined entry and an amazing risk to reward ratio. But definitely looking to go short in this market. We just want to wait for the right confirmation and enough confluence in order to trade this market lower. So I'm going to finish on the XAU USD today. I don't want to do too many markets, just as James is going to be doing some analysis for us today. So yeah, we'll finish on the XAU USD. We can see here how price has penetrated this higher time frame supply zone. We've seen great rejection to the downside, which is amazing. This is the confluence and confirmation we need for price to continue trading us short. Unfortunately, we got swept out of the markets last week. We were very unfortunate with gold last week, but I'm looking to make up for that this coming week. We can see here how price has traded into this fractal supply zone, and we've seen good rejection to the downside, setting new highs and lows. If we go to the 5 minutes, I think this presents itself to us. Yeah, so we can see this hidden order block here. That's brilliant. We've seen good rejection to the downside. That's exactly what we want to see. Now I just want to see a continuation in bearishness. I've gone ahead and marked out another zone here on the 1 minute time frames. This is extremely fractal, but I believe there isn't anything else that has been left unmitigated. There's nothing else that price needs to come in clear in order to continue trading us lower. So once price trades into this zone, I'm expecting to see an introduction of bearishness and a continuation to trade us lower, and then I'll be preparing to take this market short. realistically, I want to see a break in a good protected low just to kind of give me confirmation. As I have been unfortunate with this market last week, I don't want to be jumping the gun as such with this market. As we know, this is a bearish market. I'm expecting price to trade as bearish. However, due to recent events, everything that's going on in Palestine and Gaza and things of that nature, it's only increasing the value of gold. So when fundamentals are taking a high impact on these markets, we have to stay vigilant and we need to be cautious with the positions that we are placing. As I say, last week we were unfortunate. We missed out on some short positions that we were placing as we believed price was ready to reverse to the downside. However, price continued to trade us higher and just took us out of us slightly before trading lower. So I don't want to fall victim to that this time round in the coming week. So I will be just waiting for further confirmation. As soon as I have that, I will be looking to get involved in short positions in this market. But I am definitely wanting to go short. As I say, we just need to wait for further confirmation. So I'm not going to give any zones or any areas specific in today's analysis for this pair, just as I want to wait for further confirmation. But look for opportunities to go short in this market as they will be coming. And I do truly believe that we will see a large push lower. A lot of demand that's been introduced, I think, will be taken out of the market, and a lot of supply should be introduced just to make up for what's happened over the course of the past week or two in terms of the value of gold. But yeah, that's my analysis for this Sunday sessions video. I've covered 3 pairs. I didn't want to go too great into detail. I didn't want to do too many pairs. As I say, James is going to be taken over. But what I have done is given you some key zones and areas to look for the NASDAQ and for the GU markets. If you have enjoyed this analysis, as I said before, please leave it a thumbs up. And if you are unsure about anything I've gone through today, again, leave them in the comments below and we'll get back to you as soon as possible. But what I'm going to do now is I'm going to pass you over to James. He's going to cover some pairs of his own and give you his rundown on the markets.
Hello everybody, thank you to Luke for passing over to me. It must obviously be a pretty weird one for everybody to hear my voice after such a long time. However, I did want to spend a little bit of time going through the markets just to kind of walk through what I'm seeing at the moment. Obviously, most of you know I have spent a little bit of time away and not really looked at the markets or analysed them in quite a while. However, I still understand how I can analyze them, because at the end of the day, trading is systems. Okay, trading is systems. The people who follow the systems get results, and the people that rely on winging it or rely on their emotions really don't get anywhere. So I'm going to just use the very basic systems and principles that I learned quite a while ago to see what this market is telling me. So obviously, I'm always going to have some form of a top-down going into this. Now, I'm not going to do a full case study and start from like the week and work my way down, because, you know, I'm only looking at analysing this market and making predictions for the coming sort of weeks. So the only thing I really need to be aware of is a couple things. Okay, so the first thing that I need to be aware of is, obviously, is there anything on the left here that could be seen as a supply zone that price could be trading back up to? Now, the reason why I want to know that is because I can obviously see a reversal down here in the market, and we are creating bullishness, but I want to make sure there's nothing too close at the moment that price may want to tap into and reverse from. So the first thing that kind of strikes me, if I can even remember what the rectangle is, which is in there, we quite clearly have a zone in here. And we also have, if we go POI supply, and I'd argue that we also have a zone inside of there. So there is 2 zones that I'd be looking at as of current for price to tap into and reverse from. However, we're still not quite close to them. And if we kind of zoom out ever so slightly, we can see, by all means, just looking at this here, that we've had a low created here that should have been protected from this bullishness. That low was broken, where we see price coming over to break structure. I think all the templates are still there. Price coming down at this level would then suggest that this is the first impulsive wave of of bearishness. And obviously, in order for that bearishness to continue, we want to see a reaction from a supply zone in order for price to tap into it. We know that when we tap into a supply zone, what happens here is that supply is introduced into the market, therefore tilting the supply and demand balance into supply's favor. This happens because we have a Wyckoff schematic, in this case a distribution, form inside this region. A distribution is where the institutions are manipulating the market so that they can actually cause a reversal, a new move in their desired direction. So obviously the immediate zone I'd be looking at are the two that I have highlighted just there. And then as we go up, I'm sure we can probably find a few more zones that are relevant, such as this up here. Very much looks like it could be a zone that gets mitigated. However, I would be surprised if price does pull back all this way, because when a new trend starts, it's very typical that that trend will have a lot of power or a lot of fuel. And therefore, because this is actually the first impulse of what I believe is going to be a new wave of bearishness, I'd expect there to be quite a lot of supply prominent because it's the start of a trend. As you'll probably know from looking at any trend in the market, what typically happens is that at the start of the trend, our impulsive waves are longer and our corrections are shallower. And then as time goes on, we see that it kind of becomes the other way until eventually we kind of have price reverse. And what will happen as we get to the latter end of the trend that we're going through, we'll typically see shorter impulses and deeper correctional waves, because it's showing that throughout that move and throughout a down move, our fuel is supply. We'll see that supply throughout that move is slowly thinning. It's like a fuel tank. It's slowly coming towards the end. So what I'm kind of expecting from the market as of right now is that we've got a lot of fuel in the tank. Okay, so there shouldn't really be a reason for price to have to make a really big move back up before taking that next impulse lower. So ideally, yes, I've marked out a zone up there. I would actually prefer to see it tapping one of the two zones that I've got highlighted just down here. Obviously, either of these two would be relevant. Is it going to let me just drag that along? Yeah. And now that I've got the bias, I want price to trade up to here, I'm going to go lower and look inside of price as we head towards this. Now, if price brings a pullback before hitting these zones, we can see there's a couple of, levels of demand that we could identify and look at. The first one is probably this one here for me, which looks quite relevant. And then as we kind of look lower, price has tapped us back into that region. But what I can definitely see is a region down here where I can see another level of demand. Now I need to change those to my demand zones. Perfect. To demand. And as of right now, my bias is probably going to be the fact that I do overall want to see price trading us up into the supply zones up here. And what we can also do is we go on these lower time frames and we can validate the zones that we've identified. Now, we can see quite perfectly that we've had a supply zone here that price came into and tapped from September of 23. So that's not even that long ago. A very nice trade could have been taken here that we could have profited from. We can see as well as that we've had a zone here, a very clear buy to sell that was tapped into. We had the reversal and we had a move down from it. So quite a few opportunities for trades within this region. Another supply zone here that we have had a reaction from and price come lower. So quite a lot of opportunities to get involved in shorts. And obviously given our risk management where we do look to partial and bring our stop loss to a break-even level, these would actually have been profitable positions. So we can see they've already been mitigated. Going up the relevant ones though, I would say, yeah, that looks very great as an unmitigated zone, as does this one at the top here. So what I'm going to do is I'm going to set an alert at the top one, which is 1.08308. Great. And then we'll make one at this one just below, which is 1.07804. And we'll create another zone there. So I would love to see price coming down and tapping into that. Obviously, whilst we wait for that, price has still got to trade bullish, of course. We may see a deep correction of this bullishness down into one of these demand zones. But if we go lower again, we may even see, we can refine the zone, which looks like it's actually going to be this region sort of in here. And we may even look inside of this and say that if there's still just so much demand active in the market, price may just continue up. But I do actually quite like the look of price coming down and tapping me into this perfect last sell to buy candle. So I'm also going to place a little alert here at 1.06605, as I feel like price could very easily come and tap into that. And the reason why I think that is because we have quite a clear level of demand here. We've had that sell to buy, and the reason why I see this as such a good demand zone and why I believe this represents an unmitigated position is because after the creation of this sell to buy, the volume we see within this 5-minute candle, is very high. Okay, we've got a very long candle. Not only is the candle itself long, the body of that candle is also very long, which suggests that we have a lot of volume and a lot of institutional control in this region. And given that that's happened, it would tell me that the institutions have some positions open down here because they were active in that region. And if they have positions open down there, that suggests to me, of course, that that they're going to want to bring price back down to mitigate it. So just to round that up, longer term, I'm expecting price to hit into one of these supply zones because this break of structure you can see on the left here has signified the start of a downtrend. Obviously, in order for price to trade us up into these zones, we have to see this bullish structure. Within this bullish structure, I would actually love to see price pulling us back into this zone, accumulating, reversing, making that push higher until we enter one of these and eventually reverse and make that move lower. So in terms of like an intermediary trade I'd be looking to get into during the week is either this zone here, or if we see price continuing to trade up, maybe some scalp-like buy positions we can get into. However, given price is getting us so close to this supply zone, we may have to be quite cautious because this is where the institutions are going to get active. And one thing we know is that when the institutions are active, that is typically when the market's looking to build liquidity and manipulate us, because that's how they really take over control. Now, hopefully that's been a little nice insight. I know it's just a short and sweet segment, but hopefully it's been quite a nice insight into, not even like a reminder, I guess, into how I guess just trade and view the markets. Because I know there's a few people obviously that followed me fairly closely throughout and probably haven't seen I know me and Luke obviously have a similar style, but maybe haven't seen me analysing in quite a while. So hopefully that clears some things up. As always, if you've got any questions about this at all, you can message me directly on Telegram at James LAGFX, which looks a little bit like this, at James LAGFX. Feel free to give me a little message on there. Feel free to leave a comment. Obviously, if you have any suggestions for videos moving forward, especially if there's things you maybe see or hear in these Sunday sessions that you're a bit like, I don't fully understand that, it is a brilliant opportunity for you to leave a comment down below. Let us know that you'd like us to cover that topic, because we're always looking to help out in any way or form possible. So if there is anything you're slightly unsure about, make sure to leave a comment. We can get back to you. We can create a video around that thing you're unsure about. Just make sure you're confident, because our objective is that watching these Sunday sessions gives you as much value as possible. Now, if you have enjoyed, one thing that would actually help us out a lot, if you'd like to just help out a little bit, get involved in the Learning Lounge. There's always a link below. Give this video a like, share it around, all that good stuff. You know the crack. But I do just want to say thank you to everybody for watching, and we look forward to catching you all back here again in another Sunday Sessions video. Hope you guys have had a great weekend. Take care.